Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and this week we're broadcasting from Exarban, which is underway on the Nebraska State Fairgrounds. Well, we're going to really do a big focus, speaking of soybeans, on what's really going on in this market. I know there's a lot of factors that are weighing in, especially when we look to our neighbors to the south and what's happening harvest-wise, whether it's corn or beans that we're looking at here. Weather is also a concern for many. And then the big question out there is, do you buy or do you sell or do you just store it? We're going to talk about that and a lot more. And last I heard, decent cash numbers going on the cattle again this week. So stick around for this week's episode.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again as we jump into today's program. Of course, Darren Frye joins us with Water Street Solutions, and Kyle Bumsted joins us as well. And I always say this every week that we do the show. I wish I would either be recording before we start or recording after, because there's so many great conversations that are taking place. So let's kind of kick it off with this soybean discussion, because I think that was probably the biggest thing everybody was watching this week. And so I'm just going to step back. Darren, I'll start out with you. And Kyle, of course, please jump in anytime you'd like to talk. But Darren, kind of what has been your takeaway with this soybeans? Are you bullish or bearish on what you're seeing in this trade?
Well, longer term, I'm looking for a place to sell. I'm bearish. I think we can go lower, but it's just, is that from $10.50? Is that from $11? I mean, a lot of the trade was pretty bearish on the first 30, 40 cent rally off of $9.50, and we've surpassed that. And Kyle will talk a little bit about carry and what he's seeing, but I just don't think there's a fundamental makeup here that gets us real bullish, but that doesn't mean we couldn't go higher before this market rolled over. We got a lot of fun short covering, and I think that the macro environment has changed. And so, you know, bearish the dollar, bullish commodities, a little tailwind, and I think that's what's going on here more than anything.
For you, Kyle, what are you seeing on the bean carry at this point?
I'd have to agree with Darren that most of this has just been money flow, covering shorts, because when I look at how the market is structured, we're hearing a lot about problems in South America, dryness, whatnot. We're hearing about problems here in the U.S. Bean yields aren't there. I'm not going to get in that discussion here, but what does tell me that there's some issues in South America is when I look at that May-July bean spread out there, there's not a lot of carry out there between May and July. And if we look at the calendar, that's when South America is bringing their harvest to town. So obviously there's a problem down there, and the commercials are thinking that there's a little bit of an issue down there. Up front here, we know we've got beans coming to town. I mean, there's plenty of carry. You're 18.5 to 19 cents carry between Nov to Jan. That tells me that at these levels here, I'd probably be getting some beans hedged and just be looking to roll them out there and capture the carry if we're going to be storing beans on the farm or something along those lines.
Well, I think the $1 million question out there right now is, when you look at South America, when will they get this crop planted? And then how much delay does that affect the second crop, for example, with the safrinha? Darren, what are you hearing from folks? And is there a guesstimate of when we might see that crop go in the ground?
Well, there's a lot of the forecasters are saying here in the maybe the early second week of October, maybe the end of the second week, so toward the middle of the month, you're going to see a pattern change. And I think they're holding off because they haven't been much drier in the last 3 decades than they are right now. It's been really hot down there, but that'll be key. October 15th will be key to whether they're going strong or not, because if they get too much later, it puts this safrinha crop at risk. And then you might see some of those guys that can go to cotton, just scrap the whole bean corn rotation and go to cotton, bearish cotton, and a little bit supportive beans, a little bit supportive corn. So I think we got to watch. Next 2 weeks will tell us, but right now I think that's what's got the trade excited.
So I got to do a quick follow-up on that. If they do this switch, what does our market do? How do we react to that potential of somebody stepping away from the corn or the bean side of everything?
Kyle, you want to address that?
Well, I think if we're going to see something like that happen, you're probably going to see a shift in the basis here start. You're going to start to see the basis tighten up, and you're going to start to see those spreads move from so much carry. You're going to tighten the carry up in those spreads because the commercials are going to start coming into this market and buying this market. If there's a bigger issue like that down there where they're switching out corn and bean acres, you're going to see it happen in the spreads. First, the basis is going to move, then the spreads are going to move, and then the futures are probably going to go ahead and take off with it too. So we've also got to watch for a macro picture too. Darren mentioned cotton. I mean, cotton's been suppressed for a long time, and then you saw China come in here and inject a bunch of money into their economy, and cotton, soybeans, hogs, and crude oil have been some of the main commodities affected when there's anything in the news with China in the last, I'd say, 4 to 6 weeks. If they were all red, there was typically not every time, but there was typically a headline tied to China with it when you saw all those commodities red, because it was demand for crude oil was down, and then demand for cotton because that's an elastic demand, and then you saw hogs lower and soybeans lower, and there's a China headline. So it was affecting everything, and I think we need to really kind of keep an eye on what their economy's doing here too.
So what is your thoughts? I mean, the whole China stimulus discussion kind of seemed to go on Monday, Tuesday, Wednesday. We were seeing it creep into market discussion. Darren, I'll start with you, and then we'll jump over to Kyle. What was your takeaway of this, and will it be some longer term effects on the market?
Well, I mean, they're doing a lot to try to stimulate their economy in many different ways. And obviously, that's going to give us a little bit of a melt up, a kind of a rally, a feel good, if you will. But I think that speaks to how poor their economy is. And that has me concerned longer term. If they're having to do that much, kind of like us cutting 50 basis points, probably going to cut more. Are we in that good a shape economically, or are we in worse shape and we just haven't found it out yet? The talking heads keep telling us what we should believe, but sometimes that's not what happens. And down the road, we find out it's very different. So China's aggressiveness has me concerned for the longer term, past 4 or 5 months from now.
What about for you, Kyle?
Yeah, I'd have to agree with that. I mean, we've also got an election here in the States that we're going to have here in about 6 weeks that we've got to deal with too. And whatever side you're on, there's really not a lot of talk about foreign policy or what trade deals are going to be out there, anything like that. So we've already been through one administration. We know what trade deals are like. They're easy to win, according to some. And we've got something. We've got one sitting in the White House now, or we've got a party sitting in the White House now that if they get back in there, we don't really have much of a trade program now that they really don't talk about it. So I'm a little bit nervous about trade moving forward here, and especially with China.
So let's talk about, do we sell or do we store? That seems to be a conversation I've had a lot with producers as of late, as they're finally starting to get those combines into the field. Kyle, what have you heard from folks as you talk to your customers?
A lot of folks got stuff forward contracted here. There's not many years where you make your highs of the year in January, and then it's been down ever since. But a lot of folks did take advantage of that rally we saw there late April, early May, and now they're delivering that. And with the price of option volatility has been very, very cheap. So if you want to re-own something, options are not costing near what storage is to pay for commercial storage in town. So there's been some things out there in that May and July timeframe done option wise to re-own some of those bushels. And likewise, on the flip side of that, if guys are looking to store beans on the farm, I work with some growers that grow a lot of seed beans, and they don't have anything priced, or it gets priced in certain ways, but they're like, hey, I want to protect this. Puts have been very cheap or cheaper to buy here recently with the volatility it's been leaking out here over the last 4 to 6 weeks. Corn, same situation here. Been looking at doing some downside protection there while we're back up at these levels. Although we are not far off the synthetic government put here for crop insurance. So we do need to keep that in mind. Is this our crop insurance rally? Even though it's not Discovery Month, are we just going to float around up here and just stay above it? And then what happens after that is kind of what I'm wondering, what happens with the markets after we get through this crop insurance price discovery, if we still maintain a big corn crop, and there's still a lot of corn out here in the country to move yet too.
Always helps if I unmute myself. Darren, what are you hearing from a East, Corn Belt perspective then?
We have really good crop. We're fighting basis issues, storage issues, especially the further east you go. Kind of a train wreck on that aspect of it. But corn yields are hanging in there. We are hearing a few disappointing corn yields as people get deeper into their harvest, but corn overall is really solid. I wouldn't be surprised the government's got that pretty well pegged or even has to go up a little bit. On the soybean side, though, I think they're too high based on what we're seeing. We're hearing some good yields on early cutting of beans. The guys that got out there and got stuff planted before April 20th, let's say. After that, beans have gone down. So you move from 85 bushel beans down to 65 bushel beans. That has not been an uncommon thing here in the East. I'm not sure about out west as much, but out east, that's what we're experiencing.
Let's talk about the excitement that's happening in this cattle complex. I mean, we saw decent numbers move in the cash last week. To see it repeated this week. I know, Kyle, cattle is kind of where your passion is in this marketplace. What is your takeaway of what we've seen week number 2?
Well, higher cash, higher steer weights, record all-time high steer weights, higher cash. I mean, big cattle, big check. That's what the boys always say is big cattle, big check, and corn is cheap. So looking at it though, here we did see some decent cash trade here. We saw 184 to 186 paid down in Kansas and Texas here earlier this week. It was 184. Later on here, as we got into late week, it was 185, 186, and then we did see 187 start to trade here in Nebraska late Thursday evening, and then it's dribbled into Friday morning as well too. On the flip side of that, box beef market has not gained any traction here. I'm a little bit nervous about that. And I mean, there's a lot of people talking about packer margins, but if they didn't need the cattle, they wouldn't be out here aggressively buying them. So I do know some cattle that were bought last night that are going to ship here this afternoon, and I know some cattle that were bought on Wednesday that are probably going to be shipping on Sunday night. So they are fairly close to the knife in some areas. Now there's some packers that are buying with time. So there has been some talk of these port strikes and how that's going to affect things, but I think that could affect the pork and the poultry a little bit more than it would affect the beef trade or the export market in the beef. So I'm really not too concerned about that yet, but I will say though, it is a black swan and cattle are very susceptible to black swans. So cattle have been following the stock market pretty good here. The stock market's been working higher, cattle been working higher, and we've also seen the commercials coming in here buying the spreads as well too. We've seen the short covering from the funds on both the feeders and buying in the live cattle. So far it's looking good. If those spreads start to roll over and we get some key reversals on those spreads here, like on a weekly chart, that's when I get a little bit worried here to the downside.
Well, Darren, as we wrap this up, I want to get your thoughts as well on this livestock complex for the cattle.
Well, I do a lot of stuff from a technical standpoint, and I really like the cattle for higher still. I don't see anything fundamentally that's going to, change that abruptly. But you always have to be ready. You have to be nimble, especially when we're up at these levels. But seasonals are for higher. We get into tighter inventories here as we move forward, it appears, and so they should be well supported if the consumer doesn't back away. Like Kyle said, box beef has to be watched very closely. On the hog side, I'm bearish here for a $6-7 move down. We didn't see anything of significance to get bullish about on the report yesterday. So it's neutral, and some of the heavier weights are coming. And so I think that's good for December, probably to move down in that $68-70 level.
All right. Well, gentlemen, thank you so much for joining us this week. Our time is up. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been another edition of the Nebraska Soybean Board Weekly Market Roundup.